You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in the world of volatility? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which all of you folks are binging these days. Go ahead, keep it up. There's more where that came from. Hopefully you're having a good week out there on the trading front. It certainly is a topsy-turvy one. We will get to all that fun in a second. Of course, if you're just listening to Vol Views, what are you doing? You're missing out on a whole network's worth of fun content. So wherever you're listening to this, make sure you upgrade to the full kit and caboodle. Then, of course, if you like what you hear, this show, anything else, throw a like, a star, a comment. We've been doing this for, 17 and a half years now. So we know a little bit of something about this podcast game out there. But there's new people all the time discovering the content and the world of options and indeed the world of volatility. So help them find their way. Head on over to your platform, leave a rating, a star, a comment. And of course, if you want to go above and beyond for the hardcores out there, those of you who are asking us for years, can you offer something more, something above and beyond the network? The network alone was not sufficient for your needs. Well, we created the Pro just for you folks. You head on over there, of course. Get yourself Options Oddities immediately after this show. That's always a fun one. You get the live streams over there, as well as giveaways, a whole bunch more. TheOptionsInsider.com/pro, the place to go to learn about that. As we go around the horn and learn who's joining us on the old program today. It's a jam-packed show because it's a jam-packed vol week. A lot to get to. First, let's go out to the dark and stormy shores of Maine, where we are joined once again by the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to Volatility Views, sir.
It is good to be back. It's been a while. You called me on a relatively low vol day.
Quite literally, yes.
But a high vol week.
Volatility is much lower. Spoiler alert for the rest of the show out there. All right, good stuff indeed. As we keep on rolling, we are also joined this week by our old friend making a rare double appearance 2 weeks in a row. Our old buddy, the once future and now present Mr. Dr. VVIX, a.k.a. Russell Rhoads, hanging his hat these days over there at the KELLEY School of Business. Mr. Dr. VVIX, welcome back to the show to you, sir.
Always happy to be here. Always happy to talk vol. You know that.
I do know that, which is why you're good for this show, sir. You're a good fit for the old vol views. And speaking of fitting, we got to make room this week, listeners, because we're squeezing in a fourth seat, a fourth chair, a newcomer joining us on the program today, and indeed to the network. He is Matt KOREN, the equity and index derivative sales and lead for global VSTOXX over there at EUREX. Say all that 5 times fast. Matt, welcome to the Volatility Views program.
Hey, Mark, thanks for having me. Great to be here.
And as we are wont to do with all of our first-timers here on the network, Matt, why don't you go ahead and give our audience a bit of an overview of your background in the world of derivatives and volatility, as well as what it is you do day to day over there at EUREX.
Yeah, absolutely. So, I wear a number of hats here on the equity index team here in New York. But I guess what is probably most relevant for this conversation and for your audience is my role as kind of spearheading our VSTOXX efforts across VSTOXX futures and VSTOXX options on futures. So maybe it's a good time to kind of walk the audience through what VSTOXX is and maybe, EUREX more broadly, given EUREX isn't really a common household name. So, VSTOXX, similar to VIX, tracks implied 30-day volatility. VSTOXX tracks implied volatility on EUROSTOXX, where VIX tracks obviously implied 30-day volatility on the U.S. market and S&P more specifically. So, VSTOXX futures and options are part of EUREX's kind of global futures and options package. We have thousands of futures and options listed. EUREX is really kind of one of the global European derivatives exchanges, again, heavily focused on Europe. And then I guess taking a step back even further, EUREX is part of a larger company called Deutsche Börse Group, headquartered in Frankfurt, which manages a number of trading venues, clearing houses, as well as data and analytics companies. One being the Frankfurt Stock Exchange, another being Xetra, which is kind of one of the premier cash equities exchanges across Europe. We also have EEX, which is the European Energy Exchange. And then we also have, one of the other companies that Deutsche Börse owns is SVIX, which obviously manages the EUROSTOXX index, as well as VSTOXX. So, my role at EUREX is really to kind of pitch the European markets. EUREX has EUROSTOXX, it has VSTOXX, it has the German DAX, which is definitely a household name. We have the Boonbobble and Schatz, as well as a number of crypto derivatives, dividend derivatives, et cetera.
All right, a lot of teases there, listeners. Don't you worry, we're going to get to VSTOXX in a minute. But first, it is time for a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review, the portion of the show where we break down all the trades and trends and developments and just general goings-on in the domestic volatility market out there. And all I can really say coming into the Volatility Review this week, listeners, is what a difference a day makes. This time yesterday on the option block, it really did seem like the worm had turned. We kicked off the day selling off aggressively in most of the major indices. We were well below the magical, mythical 5,000 level in the SPX. And it seemed like really the prediction you folks made last week that if we do break 5,000, it was look out below time. It seemed like that was coming to pass. Vol was popping again. It seemed like we were heading to the downside. Then, of course, the bulls got the bit in their teeth. The rally kicked in. Of course, yesterday, a lot of the spookage was coming from from Meta and those folks out there. Meta really spooking people on the prospects for big tech going forward. And then again, 24 hours later, what happens in the after hours last night? But old school Alphabet and Microsoft righting the ship, showing, yeah, big tech can make a boatload of money again. All is right with the world. Magnificent Seven can throw the markets on their shoulders again and carry it just soaring back to new heights. So what happens today? All that red is gone, and now we have the S&P up nearly 1.25%, over 60 handles, soaring back up, not just north of 5,000, but north of 5,100, 5,110 pretty much out there as we're kicking off the show. So quite the robust turnaround just in the span of 24 hours. That's what earnings season can do, listeners. So if you were a little sick of all the macro goings on, the push-pull, the he said, she said, the will they, won't they of the macro side, earnings season gives you a nice little glimpse behind the curtain, if you will. And again, the outlook changing very much over the span of 24 hours. People always ask us, why can't you prep for vol views, let's say a week or two ahead of time or a few days ahead of time? It's because of stuff like this. Because it is literally impossible to prepare for this show more than, let's say, an hour ahead of time. Because you have no idea what vol environment is going to be going on or even coming into when the show starts. So it's always fun. It makes it challenging, but also fun to do a show like this. All that a long way around, listeners, to saying vol, spoiler alert, a lot lower, as the Rock Lobster alluded to. I'm already seeing the headlines, Andrew, so if the meatball was here, he'd be very offended because there's a lot of percent going on out there right now with everyone talking about how much VIX has dropped, what percent of a percent. So I know it drives a lot of the hardcore vol folks crazy out there when they hear it. So if that's the case, maybe stay away from your major media outlets today because it's all the rage. The quote-unquote fear gauge, the VIX dropping on track for the biggest weekly drop in a year, all that kind of stuff. So yeah, look for that, percent everywhere. All that a long way around again to saying VIX threatening to break the 15 handle in the other direction, listeners. 15.10 when we kicked off the show, down nearly 4 points from this time last week. 3.8. Yeah, we were threatening a 20 or at least a 19 not too long ago. And now here we are threatening a 15 in the wrong direction. So, man, again, what a difference 24 hours can make, listeners. VVIX, the vol of vol, we were just talking about that too. When it gets to the mid-70s like it did not too long ago, buckle up because it tends not to hang out there too long. That's exactly what happened. We broke into the 100s earlier this week. All that gone again now back to an 82, down a whopping 17 points from where we were this time last week. So again, a lot going on. It's a lot of table setting, but I'm curious to get everyone's thoughts. We'll go around the horn the way we started. Let's go out to the dark and stormy shores again. Mr. Rock Lobster, a certainly intriguing week. It's certainly an intriguing 24 hours on the vol front. What's been lighting up your tape out there, sir?
I think it would be interesting what Tucson would say, or Russell and our UREX palette, but like inflation, who cares? You know, like the inflation, I mean, it's clear that inflation is picking up or accelerating, and you know, we're not 5250 anymore SPX, but it certainly doesn't seem to care that inflation is ticking up anymore. So ultimately, you gotta, you know, if the market's going up, it's going up. And I think people are like, oh, inflation, you know, but it feels like any kind of a rate drop is dead. And right now, stocks don't care. And I wrote about this earlier in the week. Ultimately, they want good earnings. And right now, the fickle earnings market gods like the earnings. So we're going up. The two probably most important companies between Google and Microsoft. I mean, Meta somewhat, but Meta said the anti-word, you know, like, oh, we're not, you know, we don't see AI helping us. But I guess Microsoft and Google learned from that report and didn't mention anything about that. And here we are. But I would say we still have a flattish front end. 9-day VIX is still trading, I believe it's 9 day is 15.19. So it's getting close. So there has been a pretty good smash in short-term volatility. But this morning it was pretty, I don't know, pretty robust. So again, just you still have the short end of volatility is still pretty perky. And you know, in my mind, that still means, you know, the rally we have today could be the rally that goes away on Monday. So I still think there's, and we have a Fed announcement, I believe, on Wednesday. You know, they're going to talk about, you know, whatever they talk about. So anyway, but I still think that the curve is kind of flattish in the front, which still usually signals more choppy markets.
The curve. We'll get to all that fun in a second. First, let's keep on rolling. Go around the horn. Mr. Dr. Vic, same question for you, sir. A very turbulent week on the vol front, a turbulent 24 hours on the earnings season front. What's been catching your eye out there, sir?
Well, we did, yesterday, like you said, 24 hours ago, we were in a very different place with respect to VIX. And, going through the tape to do what I'm supposed to do before we are on this program, you saw a lot of pretty smart traders yesterday morning put on some short VIX positions with VIX in the 17s or so, using weeklies as well. You got a lot. You had the S&P looked pretty darn weak yesterday, and you had VIX work its way up very quickly and then start to take a turn to the downside. And the volatility traders, I always say the volatility traders are a lot smarter than regular old derivative traders, et cetera. Most of the big trades that you saw yesterday morning were bearish on VIX. They weren't panicking, I guess is a good way to put it.
Indeed. And last but not least, Matt, same question for you, sir. We'll get to all the fun across the pond in a second, but we like to start our eyes firmly affixed here in these domestic vol markets out there. Anything catching your eye this week in a very turbulent volatility market here in the U.S., Matt?
Yeah, absolutely. I think I very much agree with what Andrew and Russell have said so far. I mean, this week has very much been kind of the week of earnings. Make sure the likes of Meta and Google, didn't completely ruin the entire market. With that being said, we are seeing vol sellers out there, but to be fair, I mean, vol is still relatively elevated where it was at the start of the year. With that being said, I mean, next week starts central bank activity. As Andrew said, we will hear from the Fed. Obviously, we have Apple next week. That could be a big mover. European markets are closed in the middle of the week. So that could also kind of introduce some volatility as markets reopen. But I think, right now, earnings are definitely kind of the story. I think the market is happily looking to any good news as we come off some of the, geopolitical conflicts that we saw in the Middle East. But I think the reality is central bank activity and rates are unfortunately, going to come back into the picture sooner rather than later.
That's a good point, too, about vol is still elevated. But I was half joking earlier about how we're about to crash through a 15 handle in the wrong direction. But a month ago, we would have been clamoring for a move up to 15. It would have seemed like vol was extremely juicy. So indeed, it is all about frame of reference. And now it is time, listeners, to expand that frame of reference beyond just our shores here with a little bit of the old international volatility review.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by EUREX, home of EUROSTOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. EUREX is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX.
All right, everybody, welcome to the inaugural International Volatility Review. Now, the show's been running for a long time, but never let it be said that we don't like mixing things up every now and then. This actually is a bit of a return to form for us. In the early days of the show, well over a decade ago now, we used to have a segment similar to this. I believe it was Jared Woodard used to do it for us. He used to look farther afield and see what was going on. Back then, there weren't many options, pun intended, on the international vol side. But it's always been something I've wanted to bring back to the show. I know a lot of you have written in over the years, especially when things, let's say, flare up internationally, as they did over the last few weeks. A lot of you like taking a look maybe beyond just what's going on in the domestic vol markets. So we got you covered here on the show this week. As Matt alluded to, going to talk now a little bit old VSTOXX, which coming into the start of the show Not that dissimilar from a level perspective to what we're seeing out there in VIX Cash. I said VIX Cash was a little bit north of 15 at about a 15.10. VSTOXX, when we kicked off the show, is at about a 15 and a quarter. Just to give you some frame of reference where we've been hanging out for the past year out there. As you can probably imagine, the trend has been mostly similar to a lot of the other vol products in terms of general trend. Vol has been coming off for the most part, with the exception of a few key moments. This last month, of course, being one of them out there. The actual 52-week high for VSTOXX came around the same time as a lot of the rest of the market, around close to Halloween of last year, October 20th of last year, hit about 23 and a third. The low came mid-December, like you would expect, 12.12. It threatened it again, got close to that again back in March. Didn't quite hit it, but got pretty close as well. So that's the range. We're kind of hanging out at the lower end of that range right now, but a lot to unpack. Matt, you kind of kicked off the show talking a little bit about VSTOXX. Let's get into it in a little bit more detail now. I know for a lot of our listeners, especially for a lot of the newer listeners, this is all new material for them. You already talked about kind of what it is, but break down a little bit more details in terms of who's using this thing out there. And I think for a lot of our listeners, very importantly, how does this thing stack up to VIX in terms of similarities and some differences?
Sure. So maybe I'll start with the, kind of the later question there. VIX and VSTOXX are extremely similar. They are definitely cousins. So as I said before, they both track implied 30-day volatility at expiry. VIX obviously looks at S&P. VSTOXX looks at one of the most liquid indices in Europe and one of the most liquid indices in the world, EUROSTOXX. Really, there are very few differences in the index mechanics. Probably the biggest difference pertains to settlement, which really doesn't impact, I would say, 95% of traders anyway. And that is VIX effectively settles into a auction, whereas VSTOXX settles into a TWAP, a time-weighted average price. Again, for most investors and for your average mom and pop trader, that's not really something that impacts them anyway. So there is tremendous similarities. They do generally trade in line. There is high correlation between them. Generally, VSTOXX trades at a slight premium to VIX, but that can change as markets move. As for the players that are active, most of the players from an institutional standpoint that are trading VIX are very much trading VSTOXX. There's plenty of arbitrage opportunities from a relative value standpoint, from a term structure standpoint. There are guys that obviously take pure discretionary risk. They think vol is going to go up, and so they buy VSTOXX upside. And then you also have your guys that use VSTOXX as a hedge. Ultimately, VIX and VSTOXX were both effectively created to manage volatility. And VSTOXX, whether they be VSTOXX futures or VSTOXX options on futures, are a tool to ultimately manage volatility. So very similar players. I would say what's different between VSTOXX and VIX is there is a much smaller retail trading component in VSTOXX. Europe has a much smaller retail footprint, market structure-wise, than the U.S. does. Obviously, there are plenty of players in the UK CFD markets, but outside of that, the guys that are trading GameStop and then some of the meme names in 2020 and 2021. We don't have that as much in Europe. So, the VSTOXX markets historically have been heavily blocked markets, and European markets as a whole have been heavily blocked markets. But what we're starting to see is order books are kind of coming more and more into play. Obviously, if you're a small trader, order books are required. You don't have the ability to go to a prime broker or a bank to get a block market. And so, really what we're doing at EUREX is trying to make the European markets more attractive. And one of the things that we did in February of this year, which was fantastic timing, is we tightened up some of our market making and liquidity providing requirements, particularly in the VSTOXX option space, so that screens are as tight as possible, particularly for the retail crowd out there. So now if you look at VSTOXX screens from a future standpoint, within really the first couple expiries, screens are just a few ticks wide. Which, believe it or not, is just as tight as VIX and some U.S. listed options, if not tighter. So really, the message is the markets are extremely similar. We're starting to see more and more U.S. institutions get involved in VSTOXX. given it's I would say, a more thinly traded market than VIX is. And anytime you have, less liquidity, you also have potentially more alpha generation that you can that you can capture.
You say you don't have that hardcore retail in Europe. I would say yet, Matt, because you're coming on shows like this. You're talking to the hardest of hardcores now. They're going to start becoming intrigued out there. Just a couple of clarifications. You mentioned VIX and VSTOXX kind of similar from a methodology perspective. Only real difference is the settlement. I know a lot of people are going to write in, so I'm just going to preempt this question now. What about the usage of the skew? That's a contentious issue in the world of vol. Some people love it, some people don't. When you look at VSTOXX out there, it is incorporating the skew as well, kind of like a VIX methodology.
Absolutely, very similar. Again, really the only main difference is you're looking at settlement.
All right, there you go, listeners. You can save your emails. I already asked it for you out there. Mr. Rhodes, we love having you on Vol Views all the time, but the secret behind the scenes reason we wanted to have you back this week is because when you're not talking to us, you're crunching a whole boatload of numbers about VSTOXX out there. So I probably would have reached out to you anyway to say, hey, come on, let's talk a little bit of VSTOXX because you're the guy who actually has the keys to the kingdom in terms of the data. Let's start there, kind of your overall thoughts and kind of some of your use case for VSTOXX because you have been doing a lot of research on it lately. And then B, I know a lot of our listeners are probably also going to be intrigued. Right now, like I said, we're hanging out a little bit north of 15 in VIX cash and a little bit north of 15 in VSTOXX. So not that dissimilar from an overall value level. How does that shape up historically compared to what we've seen in the whole VIX versus VSTOXX spread, if you will, sir?
Well, the way that I monitor VIX versus VSTOXX, and it'll make sense when I say it. I pay more attention to the front month future versus each other, and I have a particular time each morning that I say that's my that's the day that I'm going to record where the front month VIX and where the front month VSTOXX is, and check the spread between the two, and then if it's widened out enough in one direction or another, I might be selling one of those and buying the other one of those. And I've got a systematic approach that Matt hasn't even seen yet, but boy, are you going to be thrilled when you see what I came up with for you guys that I'm just about done writing up. It's taken longer than it should have, but it's going to be worth it. I promise. Typically, I going back the last 10 years or so using the front month future, on average, VSTOXX is at $1.65, and I'm just going to use American terminology there, $1.65 premium. It's been as much as 14 points higher than VIX. Matt kind of alluded to it. I like the way that he put, that it's a better alpha generator when you get excess volatility. It has been shown that when we get the volatility events or volatility spikes, that you're better off. If it's a global issue, you're better off being in VSTOXX than in being in VIX. It's just been more reactive historically. It's actually gone as low as VSTOXX has been as low as a $8.60 discount and a 14-point premium. So the relationship between the two does spread out some. We saw some great action. I still just love the way this worked out. But sometimes if you've got a European specific event like Brexit, VSTOXX was very elevated in front of the Brexit vote, and VIX was not. And then everybody got surprised because everybody was at Glastonbury, and they ended up Brexit ended up passing, much to the surprise of everybody. VSTOXX didn't react that much because it was already elevated in front of the vote, but VIX caught up to it. So I think, I believe, unfortunately, we can't do a replay on that one, but I do believe if Brexit had not passed, VSTOXX would have just come down and VIX would have done nothing. So I almost feel like you hate to say that any trade could have been a slam dunk, but I do think there are instances where volatility gets very elevated in front of a European specific event. If the event ends up being negative, it probably will bleed over to the United States, but it won't be anticipated the same way. So there's all kinds of things that you can do between those two markets, and keep an eye out because I write papers and I'm like, yeah, those are cool, and then I write papers I'm very excited about. And this VSTOXX versus VIX trading paper, I'm very excited about.
Yeah, I'm just looking here right now while you were talking at some very Eurocentric vol events. Obviously, the most recent one that comes to mind for a lot of people, of course, the tanks rolling in Ukraine a couple of years ago. And at that point, VSTOXX spiked to about a 44, whereas VIX, the best it could do was kind of barely break 30. So again, when a lot of these Eurocentric vol events in particular happen, it certainly is intriguing to have a more Euro vol-based product to take a look at. I've lost count of how many times people have made those inquiries to us, especially when those events happen. Brexit or Ukraine, or even back in the Crimea invasion back in 2014 was the first time we really got a lot of inquiries on the show about, hey, what else is there in the vol space that really tracks more with some of this international stuff? And so this has been on my radar for, a decade now. So I'm glad to see we could finally get some VSTOXX flavor here on the show. Before we roll out of the segment here, Matt, I know a couple other data points I want to hit for a lot of our listeners. We obviously have the Euro folks in the audience as well, but the predominant audience is here in the U.S. So for the U.S. listeners, I'm going to want to know, hey, can I access this thing pretty readily here with my U.S. broker in U.S. hours? And also, we were talking, and we're going to talk in quite a bit about the volume of some of these other products. Lay the groundwork for us. What kind of numbers have we been seeing? What kind of volume and trends have we been seeing in VSTOXX over the past year?
Sure. So, what's been interesting is if you look at average trading volume so far in April, it's trading roughly 1.5 times for both futures and options on futures last year's 2023 ADV, which is pretty elevated. We came into 2024 expecting this could be a pretty volatile year. I think there was something like 40 global national elections on the calendar, obviously diverging central bank activity potentially. I don't think anybody was really expecting the conflict that we saw between Iran and Israel in April. But obviously trading activity very much did spike this month. What is actually interesting is if you look at March and April of last year, April in particular, which was kind of the tail end of the banking crisis, volumes this April compared to last April are up 93% across futures and options. So volumes are extremely elevated compared to where they were historically. Obviously, we hope that we continue to see that. A lot of that activity is in the option space as well, which we attribute to some of the efforts that Eurex has been doing around tightening up those screen markets. So the order books are tight. We're starting to see more and more volume come through. And as I alluded to before, we think some of that is, U.S. participants and U.S. market participants are starting to look, away from what may be some frothy U.S. markets, particularly in the tech space, and they're now looking for opportunities overseas that may have been overlooked.
Mr. Rhoads, the final word is to you before we roll on here, just because I know a lot of people are probably intrigued right now and want to start looking at some interesting setups and trades. You've been crunching the numbers, VIX and VSTOXX and VSTOXX alone for a while out there. If there's any other nuggets, any interesting things you think people should keep an eye on until we come back around next week and talk about VSTOXX again in more detail, maybe a thought or an idea to leave them with, have at it, sir.
I would just pay close attention to how it's behaving mid-morning relative to VIX. It does seem to almost trade in two different sessions. I was very fortunate to go to EUREX's Global Derivatives Conference earlier this year, and got to talk to some of the people that live and breathe VSTOXX. And one of the things that they said was very interesting about it was almost like there were two different trading sessions. You'd have when Europe opens, and then as the U.S. opens, you start to get VSTOXX maybe taking the lead or maybe even leading VIX a bit. But the relationship between the two in the morning, the times that I was talking about, the first couple hours of the U.S. and the last couple hours of trading over in Europe, that just look at how they interrelate with each other, because it's pretty interesting. And the futures stay open, like the futures are still open. And so sometimes what happens in the U.S. can start to have an influence on the future, even though the index is not being updated anymore. So sometimes that's kind of interesting to look at as well, to get an idea of maybe what they're thinking going into next week or going into the following day as well.
All right, a lot to unpack there. You mentioned the futures. Let's keep on rolling now into the world of the volatility surface. Let's kick things off out there in the VIX futures. As you might imagine, given the setup to the start of the show, listeners, yeah, they're down. Spoiler alert. Down quite a bit. That May front future down almost 2.5 points, about 2.3 points from where it was this time last week. June down about exactly 2 points, 2.05 to be precise. At least it was a few minutes ago. So gone is that debate we had just last week of what is the technical definition of backward. A lot of people were writing in with their own thoughts of the cash versus month one versus month two. A lot of different permutations of backward out there, which is fascinating to see. But all that's gone now. We're not backward anymore. Back to, let's say, a more standard vol surface out there. Mr. Rock Lobster, sir, what's catching your eye out there this week as the volatility surface gives back all that juicy backwardation, sir?
Yeah, you know what? It never could quite get. I feel like this week of vol, like you definitely got some let's call it semi backwardation. You never really got anything very well. We never got into zone 4. We never got into the danger zone, and even the 21 vol was a brief spike. So I think overall we had elevated vols, but the reality is there was never any guts to a sell-off. I still don't think we had a closing 2% down day once. I know we had a 2% intraday move from like a top to a bottom, but the market could not just pick up those. Okay, we open down, go down, open down. Like it never really happened. So as a consequence, volatility definitely went up because we were moving, but it never got into the danger zone area. And I think that was the biggest tell. Like we just, the market sells off a little, but it doesn't sell off a lot. And I think that's, as we were about set to touch the the vaunted 50-day moving average again. And I think right now, I guess I have whatever different definitions of what, the VIX curve is and what I think it is. But I always look at how VIX will settle once it gets into the 12 handle. I know that sounds weird. But sort of how much forward vol the market pumps up, when the short-term vol starts to go way down. So how slow the market thinks, or how slow traders think the market's going to move. And the way I measure it, we're way above those numbers, like way above. So I think there's still plenty of movement left in the SPX based on how I read this curve. It's not as much as it was last week, but it's still, I think it's still way above what I would call a normal, like a normal contango curve. This is I'm going to call this a fake contango. This is a fake contango.
Fake condensed fighting words, sir.
Yeah.
The vol surface fan's going to come for you, just like they did last week when everyone was debating what backward actually meant. People are surprisingly contentious on interesting things, like are options a zero-sum game, for example, or now apparently the backwardation or lack thereof of the VIX futures term structure. Intriguing stuff. Mr. Dr. Vic, same question for you, sir. What's catching your eye out there as the vol surface, I won't say returns back to exactly normal, but gives up some of the ghosts from last week, sir?
It's flattening. Kind of surprised that it flattened as as quickly as it did, but even with all the volatility we had yesterday, it just ended up back in. Like I mentioned, you could see a lot of short trades going off when VIX got up into the 17 range or so. But flattening. We still got that bump out there in October for the election. One of the things I forgot to mention is you see the exact same thing in VSTOXX. There was when you asked things to look at. I knew I always seem to forget something when I'm riffing like that. And both VSTOXX and VIX still have that bump out there in October because we'll have no idea who our next president's going to be.
or if we are going to have a next president. I guess if Biden gets reelected, he's not the next president. He's just still president. But that, I'm a little surprised that we flattened this much. I'm a little surprised that I just lost a number. I'm surprised May is, I don't know, only 35 cents higher. We still got 3 weeks until those guys go off the board. So the lack of premium right now in the front month, that's kind of surprising to me as well, just because we have so much time. And hell, we got a Fed meeting next week. You'd think that somebody would be bracing for something.
Justin, you thought we could move past the Fed collectively for, dare I say it, a couple of weeks. Nope. Yeah. Fed right back in the discussion. That is the nice part about early earnings season. You could kind of try to pretend the Fed isn't there, at least for a couple of weeks out there. But let's keep on rolling. You mentioned a lack of, in your conversation there, Mr. Rhodes, and I would definitely say there's a lack of interest in VIX options out there today, listeners. You would be surprised, given the rally and the big turnaround over the last 24 hours. You might be forgiven for expecting more out there, and yet that's not really what we're getting out there, listeners. We're only barely north of 250,000 contracts right now. It's pretty anemic paper, especially when you see the ADV is starting to threaten 1 million. 926,000. That's up 14,000 this time last week. So if you're threatening 1 million in ADV this time of the show, you're barely north of 250,000. Yeah, things are looking pretty light. So apparently this massive death of vol is not spurring anyone to action out there at all. If you're wondering, maybe this is a time where puts going to make themselves known, going to fight their way into the top 10 again, the answer is no, unless you consider one to be fighting their way in which case you will be pleasantly surprised. We are 9-1 calls over puts yet again out here in VIX options land. Cost you only 187,000 contracts to break into the top 10. That's decent. It's not nothing blowing the doors off. That gets you to the July 20s. So again, kicking things off with something that is, dare I say it, reasonable. Number 9, 189,000 of the June 45s out there, followed by 198,000 of our first and only puts in the top 10, the May 15 puts, 1-5. You like those, listeners? They're looking a little bit juicier now than they were a week ago, that's for sure. Number 7, 219,000 of the May 47 halves, so right back to my favorite strike on the board. Number 6, 221,000 of the June 35s. Number 5, right back to it again, 223,000 of the AUG 47 halves. It does seem like maybe they've curtailed some of their 47 half craziness. They're not doing it every single month like they were, at least not for the size. So maybe there's something to that. Number 4, 236,000 of the May 25s. Number 3, 270,000 of the May 35s. Number 2, 291,000 of the perhaps most reasonable next to the puts option on this list, 291,000 of the May 18s. And rounding out the top 10 this week, again, a surprisingly normal position, 296,000 of the May 20s. So it's not the 60s, it's not the 47 halves, it's not some ridiculous nonsense. It's, dare I say it, relevant paper out there, which is always fascinating to see. Mr. Rhodes, I know I exhausted you with all that talk of international volatility. Do you think you have a weekly rundown in you, or are you just spent?
I got a short one.
A short one? All right, then.
Yeah, because I knew we had extra stuff going on, so I did a bit of a short one.
Really, I think the listeners, they just want the theme. So let's get to it now. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
The theme's so nice, we are legally obligated to play it twice. Just look, it's in Russell's contract there. Mr. Rhodes, sir, what's catching your eye on the weekly front this week?
Sure. Okay. On Monday, VIX was up VIX was at 1782 on Monday.
Yeah,
oh my goodness.
Seems crazy.
Somebody came in and I do not like this trade. I'm allowed to talk about trades I don't like. Somebody sold 100 of the May 15th. That is a weekly contract. 30 calls for 34 cents and bought 100 of the May 15th, 35 calls for 24 cents. They took in a dime. It was an opening trade. You could tell by the open interest, which risking 490 to make a dime. I don't know. That's not a good way to keep your job. Also on Monday, a little bit later in the day, as VIX came down, this is a good trade right now. With VIX at 1672, somebody bought 500 of the May 1st 17 puts for $1.02. They've almost got a double on those right now. They probably do have a double on those right now if they want to get out of them and go have a nice weekend. On Tuesday, again, VIX at 1624 had another a lot of buyer of May 1st puts. Buyer of 1,000 of the May 1st 18 puts for $2. Those are about $1 profit already. And then here's somebody swinging for the fences on Wednesday with VIX at 1594, and they were probably feeling terrible about this one yesterday. A nice round number here. Somebody bought 688 of the May 1st 14.5 puts. They're gunning for downside volatility, and which I don't know. So, swinging for the fences like that on with out of the money puts on in expiration is the morning of a Fed day. There are lots of reasons I didn't like this one as well.
That's a challenging.
They paid a dime for those.
That's
paid 9 cents.
a dime. That's not a bad lottery. That's a challenging road, though. You're right.
Yeah, I just I kind of get it, and they're looking pretty smart right now because we're getting close to it. But just looking at the calendar next week, that's one of the things that makes me pause. So on that one, let's see. Also on Wednesday, VIX at 1635. This is probably the biggest trade. Buyer, one of the two biggest trades. Somebody bought 2,000 here. We got a bullish trade finally. Bought 2,000 of the May 1st 16 calls for 74 cents, and they sold 2,000 of the May 1st 20 calls for 11 cents. That cost them 63 cents. And if we get a volatility event in the next couple of days, they'll make 337 off of that. Yesterday, what I alluded to a little while ago, with VIX at 1740, somebody bought 200 of the May 1st 18 puts for $1.42, and they sold 200 of the May 1st 17 puts for 66 cents. Trade looks really good right now. They spent 76 cents to make 24 cents if we stay under 17 at expiration next Wednesday. And then a little bit later, this is the biggest trade that I came across. A little bit later on Thursday, as VIX was starting to work its way lower with VIX at 1709, somebody bought about 5,000 of the May 1st 24 calls. It was like 49.90 something of those, but we'll call it 5,000. And then today, another bullish trade. Early in the day, VIX was at about 15.5. Somebody bought 750 of the May 1st 20 calls. They paid 7 cents for 300 of those, and then they paid 10 cents for another 450 of those.
Yeah, I was just pulling up those puts you talked about on Fed. I know a lot of our audience are going to probably look at those and be like, don't want to take a flyer on those, but you're right. With the Fed, that being the day they go out too, it's just, all the vol is going to come off after your puts are already gone, right?
Yeah, exactly. And that's just, I don't know.
Makes it challenging. But I guess you're looking good so far. Maybe you can scratch your dime. I don't know. I'll have to pull them up and see how they're looking right now. Let's see how the rest of the vol options market is looking this week, listeners. Let's kick things off. Like we said, kind of a light day out there today in VIX options. Barely 250,000 contracts on the tape. It's been a while since we've seen things this light out there. The big dog today, so almost a fifth of that paper going up in this option. The May 14 half puts, 47, almost 48,000 of those. That's the big dog today, followed by a distant number 2, 16,000 of the May 15 puts. So it is all puts in one call today, at least. About 15,000 as well of the May 15 half puts, 14,000 of the May 12 puts. So they got time for those to cook. And then 12,000 of the May 30s. So some calls sneaking in there. Who's buying the May 30s today out there? Listen, I'll have to go look and see. Yesterday, a more active day, 738,000 contracts on the tape. The big dog yesterday, 71,000 of the May 36s. Looks like they were hitting the bid on a boatload of these. So maybe getting the heck out of Dodge out here on some of these calls. In which case, you can't blame them for maybe seeing the writings on the wall. You've already had pretty much a good run of upside vol. How many times have we said vol is challenging? Yeah, these went up for 20 cents. That's right. We were talking about these yesterday on the option block. They were 19 at 23. They went up 56,000 times for 20 cents. So it seems like somebody was getting the heck out of Dodge on these. Yeah, because they were closing. Yes, they were closing, definitely. So yeah, bailing on the 36s. May, can't really fault them. A lot of people may be thinking, especially if you believe this rally today, maybe this past week's surge in vol is about as good as it's going to get through May expiration. Obviously, somebody getting the heck out of Dodge. Followed by number 2, 46,000 of the June 25s. Number 3, 39,000 of the May 16 puts. Number 4, 33,000 of the May 14 puts. And rounding out the top 5 yesterday, 33,000 of the May 25s. Wednesday, similar paper, about 750,000 contracts on the tape. The big dog, you don't see this too often, 60,000 exactly. 60,000 exactly, listeners, of the, I was just saying, maybe they've curtailed their activity. And here they are to prove me wrong, listeners. It's 60,000 of the June 47 halves. I was just celebrating. Oh, maybe they're not going to do it every month now. Nope, they're back. June 47 halves, everyone's favorite trade out there, listeners. 60,000 times they went up for 21 cents. Usually, I believe it's the 20s that go up again, so I have to go find the other leg for this bet. Yeah, they did the 22s. They did the 22s this time, so they did it 24 by 60,000. They bought 24,000 of the June 22s for 80 cents, sold 60,000, so almost 3-to-1 for 21 cents. As you could see, not quite a free bite at the apple, but about 17 cents. You like that? Hopefully they got some juicy futures in their back pocket against that. They're not just going straight net short units, because we've talked about that in VIX before. That works until it doesn't, and when it doesn't, it is pretty ugly. Number 2 right behind it, May 15 puts, 59,000 of those. Number 3, 38,000 of the June 30s. Number 4, 36,000 of the May 35s. And number 5, 30,000 of the May 16s. I got to get cranking. We're already coming up against it here, listeners. Tuesday, 807,000 contracts on the tape. The big dog, 63,000 of the May 15 puts. And Monday, 863,000 contracts on the tape. The big dog, 69,000 of the May 25s. Mr. Rock Lobster, sir, a steady, I would say a dense week of VIX options volume, except for today, obviously. Anything really lighten up your tape, aside from the fact that our old 1x3 friend is back for some size?
I read somewhere, I thought that 50 Cent was back.
I hear that every week. I've yet to see it.
Yeah, I you know what, I haven't seen it either. I'm going more with the with the Russell take here on. I just look at the volume and I see a lot of 14.5 puts going up. Somebody's buying the 12s in May, so all of a sudden some of this downside vol is starting to light up a little bit. So I mean, ultimately, when you look at it, that's kind of what I mean, when the paper starts coming in saying, hey, maybe all this is it all ain't so bad. So I don't know what the Fed's going to say on Monday. I would assume that's going to be a mini vol event one way or the other. But yeah, mostly just seeing a lot more downside put paper and trying to get some fills in UVXY this week, which we actually got, thankfully, when UVXY kind of flew up. It was easier to buy some puts, but for the most part, I just noticed in the a little bit of the put volume today that they're out in force, and surprisingly, so like on a side note, even with VIX down, we'll call it fractionally on the day. Most of the puts in the May cycle are close to unchanged. So you get one of those kind of futures a little down, volatility down. It's kind of like a little smack foo for the option premiums today in VIX.
A little smack foo. I love your technical terms, sir. They light up the show here.
I got it. All.
Well, we are coming up against this. I'm going to kind of condense our vol ETP segment a little bit, listener. I'm going to hit on all the salient points, let everybody kind of chime in all at once. Let's go out, starting in SVIX land, inverse vol land, threatening a 40 again, 39.80. Haven't seen that in a little bit. Up 4.6 handles on the week. Is today the day that is blown up from an options volume perspective? Not quite. 2,300 contracts. The ADV 4,200. So moving up a little bit, about 300. So that's not bad there. UVIX moving in the other direction, obviously. 890 below a 9 handle now. We were just north of 12 not too long ago. Down nearly 3 points on the week, 2.85 points. Again, it makes sense. VIX is moving that much. UVIX has to. By definition, it is levered, listeners. 26,000 contracts on the tape there. So that's actually pretty decent paper, especially when you see the ADV is 30K, up about 4,000. So this vol pop and also the addition of weeklies out there really seems to have helped the liquidity out there quite a bit. UVXY, the Rock Lobster's new favorite, 33 even, down a whopping 7 points from where it was this time last week. Man, my far out of the money UVXY put's looking juicy. Don't tell that Michael Lispman guy. He doesn't like buying any premium out there. He only sells. Today, 27,000 contracts on the tape. The ADV, 83,000, down about 11,000. So that's moving in the wrong direction. I guess this reverse split has not exactly helped things out there. And VXX to round it out here, 13.5, down about 1.7 points on the week. 65,000 contracts out there. So that's looking respectable, especially when you see the ADV is 90K. That's up 6,000. So a lot to unpack. Mr. Once and Future Dr. VIX, we'll start with you. Your beloved SVIX threatening 40. UVIX back below the 9 handle. UVXY going the way of the dodo. VXX continuing to erode. Anything catching your eye in the vol ETP universe?
I think my SVIX is going to get called away from me.
I was going to say that. I'm guessing you might be out again.
Yeah, I might be out again. I gotta double check, but it's one of the few things that's actually helping me out today, though, because I've got that combined. I'm short the 40 calls, so we'll see what happens. We'll totally see what happens. So that's it moved up quicker than I thought it would. I did think it was going to grind higher, but I didn't think it was going to grind. I don't think a lot of people would have anticipated VIX pushing 15 today.
Yeah, no, quite the
even within the last 24 hours.
Quite the percent move out there, as everyone is obsessed with. Mr. Rock Lobster, same question for you. In the broad universe of volatility ETPs, what is catching your eye, sir?
Well, we did have that reverse split last week.
I don't know what you're talking about, sir.
So that makes, UVXY more interesting. So it is doing its performance thing where it trades 40 and now it's 32. But I'm noticing there was somewhat friendly liquidity. I would not say it's hugely friendly, but I mean, volatility in UVX is down to 77% in May, which is pretty dang low. Let me see here. I was just looking for to get a little sense on this, and yeah, like we are at 30-day vol is like a 6-month low almost right now, which is, I mean, it's not dead low, but considering all the madness that we just had, I agree with Russell, man. They pulled the plug on it, like as hard as you can pull a plug on vol, I think, given how much we're still kind of moving around. It was a smacking.
And now it's time to almost pull the plug on the show. Not quite yet, though, listeners, because it is time for the most difficult, the most dangerous part of the show. Matt, I hope they prepared you, because it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, where we attempt to wrestle with what the vol gods have in store for the coming week. The rally continues, listeners. It's about the same levels pretty much across the board. S&P up about 1.25%. The VIX is at about a 15.10 still, which is pretty much exactly where it started the show. I'll make it easy on our rundown. Last week it was myself, it was the Meatball, and it was our buddy Mr. Dr. VIX. Nobody had a 15 handle. So we were all about, I was the closest at 2 3/4 handles off, and everyone else was more than that. So yeah, it was not exactly a bullseye week for us across the board. So we'll just sweep that under the rug, shall we, as we keep on rolling. Matt, as our newest joiner here, newest member, newest victim on the crystal ball here. I will give you the dubious honor of going first. You have your choice. I know you're more versed in VSTOXX than in VIX. We traditionally guess where VIX is going to close this time next week. If you want to add in, you want to do both, or if you want to substitute VSTOXX, I will allow you to choose, sir. What are you feeling for vol this time next week?
I will choose both. The Fed hawkishness is going to be way too much to ignore. Rates are going to reprice, equities lower. VIX, I'm going to guess 1580, VSTOXX 1585.
Oh, look at you, keeping that spread tight. I like it. I like a man who's willing to dive right on into the fire on his first appearance, Matt. Well done. 1585 for VSTOXX. You know what? I'm still dialing in my VSTOXX model, Matt. I don't know if I quite have it dialed in. This week notwithstanding, I'm usually pretty decent in VIX. We're not usually all off 3 handles. This was a kind of a rough week. So I will bravely go next and see what we have out here. I will do both as well. VIX, like we said, hanging out at about a 1510 right now. The question is, can we get the bit in our teeth next week? I'm going to say a little bit of yes. I'm going to say we get some spookage, quote unquote, from the Fed, and it's going to persist through the end of the week. Maybe not all of it, but I'm going to say we're going to be at about a 16.25 in VIX this time next week. And again, I'm still working on my VSTOXX models list. Maybe you are too. Maybe you can join me in this journey of figuring this out. But level-wise, they seem to be kind of in the same ballpark right now. So I'm going to go that relationship holds for this time next week. And I'm going to say about a 1640 for VSTOXX. There you go. All right, let's go, Mr. Rock Lobster. I'll have you go next here, sir. What are you feeling? If you're brave enough to do both, like I was, and Matt, have at it. Or if you're just a sniveling coward and only want to do VIX, you can do that too.
I like how my choice is so clear.
I lay it out for you, don't I?
You did. I'm going to say the market doesn't care what the Fed says anymore because they have showed a remarkable ability to not care. So I'm going to go 1408.
Ooh, wow.
And since
all right.
VSTOXX seems like a trend's lower, I will give it 10 ticks higher. So we got 1408 and we have 1418.
There you go.
I know we're running out of time. I'm going to split everything in there. I'm going to say 15.25 for both of them this time next week.
Oh, no difference. They all come together.
Yeah, basically, we're going to have a little bit of round trip and some fun next week and be right where we are next.
It is the great singularity of vol. They all come together at the end.
Yes,
of the day.
they do.
So there's your vol market, listener. Interesting. I like having new things to prognosticate out there. It makes it kind of fun out there. So there's your vol market, listeners. The Rock Lobster on the downside at about a 14 handle. Me on the upside again. I haven't done that in a little bit. Back to 16.25, and Matt and Russell vying for the middle there. But that music, of course, means we are out of time for this week. Man, what a jam-packed show. Fun to talk about all kinds of new stuff here on the show. But before we go, Mr. Matt, really quickly, if our listeners are intrigued, they want to learn more about all things VSTOXX, where should they go? What should they do?
They can email me directly, matthew.koren@eurex.com. Message me on LinkedIn as well, if that's easier.
There you go. You can message him over there. He's a brave man, giving out his email there, listeners. You can also go to eurex.com/VSTOXX, VSTOXX. That'll give you all the details. Some of the stuff I was talking about earlier, the historical range, some other white papers and things, if you want to get up to speed and all that fun stuff. Then check it out over there yourselves. And Mr. Once and Future Dr. VIX, if folks want to catch up on what you got cooking, where should they go? What should they do?
Well, I always tweet everything I do, and like I said, I've got a VSTOXX versus VIX trading paper that I think a lot of people are going to find very interesting. I've done a couple of other white papers on using the VSTOXX options that I think you can find at the EUREX website quite easily as well. So
yeah, if you search for some of that EUREX VSTOXX research, you might find a familiar name over there. So check that out as well. Russell has been cranking away behind the scenes on a lot of intriguing VSTOXX research. And last but not least, if you want to go debate the Fed with him or vol or anything else, Mr. Rock Lobster, where should they go? What should they do?
Yes, you can debate me daily in the Option Pit trading desk, if you so choose. 888-TRADE-01. You want to learn how to trade vol? You want to see our trade? We post all of our trades, trading records, totally transparent. We do very well. You want to learn how to trade options. Again, you got to put a little effort into it, but the rewards will be there. Optionpit.com.
Optionpit.com. Our chat option queen says Longo is close to me. No, it's the other way around. You are close to me, options queen. How dare you? I'm just kidding. We love get all your guesses in. Of course, if you're listening after the fact, get your guesses in as well. If you're feeling brave, maybe you want to guess a little VSTOXX as well. If you come within our 10th of a point, which none of us did this week, margin of victory, then fabulous prizes can be yours. Unfortunately, no more show can be yours, at least on the VolView side. If you're joining us on the on-demand side, that will conclude your broadcast week with us. I want to thank you for joining us in this tumultuous, topsy-turvy week. Hope your trading is going well. If you're hanging out in the pro, stay tuned. We'll be back in a little bit to talk the world of unusual activity with some options oddities. If you're not in the pro yet, what are you doing? TheOptionsInsider.com/pro, the place to go to learn all about that goodness and get access to options oddities, to the pro Q&As, everything else we have cooking. I will be heading down to OIC next week, so I will be doing a lot of content from down there, which will be going up to the pro, not exclusively, but much earlier than it will to the rest of the network. So stay tuned for all that fun over there. Coming next week. I will be back in time, though, for VolViews next week. So I'll be back in the studio next week. And then, of course, have a good weekend. Stay safe out there. I will enjoy my travels to Asheville, North Carolina. I'll be back again in time for next Volatility Views. Stay safe out there, everybody.
The International Volatility segment is brought to you by EUREX, home of EUROSTOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. EUREX is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.